The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 7th. It's the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is tossing at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what these bulls and bears, what these buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way more important than that, during this next hour, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, you can send me an email like Phil has and this baseball individual. Yes, I sent it to Steve at TFNN.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, like Coda, you can ping me with anything. So let's go ahead and get this show started on, of course, August the 7th, wonderful Wednesday. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow up off 198 points, but it is hammer time out there. And now, when I mean hammer time, if we're to take a look at the exact candle that has formed as we speak at 1:08 in the afternoon, it is a hammer candle. Now, I don't know what the end of the day candle is going to be, but still, we made a lower low inside the Dow out here. So what's the meaning there? Well, let's go take a look at Stevie's other charts out here. If we take a look at my other charts, here's what we know. That lower low today and a potential hammer candle, what it's done is it's gotten to the bar number 8 of a TD setup 9 count. Now, tomorrow would confirm bar number 9 as long as price closes below bar number 5 out here. That close, see if we can get it, was 26,485.01. It's important to pay attention to those 9 counts. They don't always work. No pattern always works. But when it does present itself, it should make you say, something to think about. Now, what the Dow has done, or appears to be doing, is really joining the futures contract, the Dow Equity Futures contract. If we take a look at it, here's what we know. We know that yesterday was the 9 count pattern, so it has completed. And what this suggests to you and I is that price will bounce, should bounce, all the way up to Stevie's green line. That level right now is 26,620. That number is going to move over the coming days as price moves. And if we go back to the Dow chart out there, so you've got the cash indice level, that's 26,683. Again, that number is going to change, but that is really where a key level of resistance should be. Now, today's session thus far, the move lower, and then its response to that is important. It is telling as we speak. So I want you to open up your mind to the possibility of a nice counter trend rally, or potentially even a significant bottom out here inside of the Dow. Now, you might say, because I said to myself, well, when price was pulling back, where was it pulling back to? And It's a great question out there. And so I searched all my different chart patterns out there to figure out what was going on. Inside, I'm going to switch over to the ES Mini right now. And on the 2-hour time frame chart, now I was really looking for charts that had solid bottoming patterns out there. So solid bottoming patterns for you and I, that could be a TD setup 9 count. It could be wave number 7. That's letter G on my screen out there. Many of you may have just listened to Basil Chapman's show. And so it's a portion, very small portion of the Chapman wave set of tools out there. It's like 1/10 of the tools out there. And yes, John, by the way, yeah, the New York Stock Exchange, it's not the 100 USA that has given the clue. It's the international that actually gave us a clue, and we'll go to that next out there. So, and I'll show you that. But here, what I was looking to understand was the pullback that went on this morning. So what I do is I take a look and I try to find a time frame or time frames that have valid bottoming signals. Because if you got a valid bottoming signal out there, then what you really want to understand is when price is pulling back, what's it pulling back to? So here you can see, for those of you that are Chapman Wave aficionados, what you can see on a 2-hour time frame yesterday was that, or it was the day before, well, whatever day, it was yesterday, I take it back. Well, it was really overnight. So it was at 8 o'clock in the evening on the 2-hour time frame when price gets down and makes wave number 7, was confirmed on that next 2-hour bar. So get to the point already, Steve. Well, since that time frame, what we saw transpire was a TD setup 9 count. That 9 count actually called a little bit of a short-term top and price move lower. But what the 9 count also did was it let us know where inside the ES Mini price had broken out. And that was at 28.3150. And as long as that level holds, folks, all price was doing today on a valid bottoming pattern time frame for the ES Mini was pulling back to test a breakout area, which is a normal thing. Those of you that have been listeners to Tom for like forever, you know he'll say when something is coming off of the bottom, you don't necessarily want to chase it. You want to go ahead and buy it as it's coming back to its breakout area. Well, this tool allows us, just simple, numerically easy, able to find where that breakout was, and it was 28.3150. As long as price stays above that, then what we should see is a run up to the 29.3350 level. That is a resistance area. If price breaks through that, then what you would be taking a look at is the 3,011.75 area. And that's what so that's what the market has done, at least today. You know what the parameters are, and so I think that's a beautiful thing. If we go back to the question that was posted in the den, with regard to other signals that might be out there, John, who posted that, was asking, hey, how about the S&P 500, the NASDAQ Composite, the Wilshire, anything similar? So, John, what was really interesting to me was as I was going through those charts, looking for pattern signals out here, was actually it's the international equities that are really being the larger portion of the drag inside the New York Stock Exchange. And so interestingly enough, John, is 2 days ago, this confirmed a TD setup 9 count. Remember, at the 9 count, it can be a bottom. Now, you might not believe me. I don't need you to believe me. I just need you to believe your eyes out there. In June 3rd, when the 100 stocks that represent the New York Stock Exchange, the top 100 international stocks, when it bottomed, guess what count it bottomed with? The TD setup 9 count. The Gordie Howe number 9. You gotta love number 9 out there. It is an indication. You must open your mind to the fact that we may have just made a fairly decent major type bottom. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's get to a couple of our questions that have come in. One coming in from the Tiger's Den. This is for Koda, who wants to take a look at the Japanese yen ETF. It's the Invesco currency shares out here. It is FXY. So, here's what we know, and just using our standard tools out here, Koda. We know that prices, if we just take a look at our profile, so let's just begin there. Daily, weekly, monthly, quarterly. And so prices above the daily, prices above the weekly, prices is in between the monthly. And so the next resistance out here, I believe you're long, or you're looking to get long out here. From a profile standpoint, what the profiles suggest to you and I is at 90.85, we're trading right now at 89.94, could be or should be some really significant resistance. Now, there's two ways to interpret that. The first interpretation is that that could be really strong resistance, and you could see price turn down from there. Because the box itself, let me just expand the chart, and let me actually turn off the quarterly for you. And that way we get rid of a little bit of noise. So just give me a moment to turn those off. So the quarterlies are gone. Now we're just looking at the monthly profiles. These are the white ones. So what you should notice and pay attention to here, Koda, is that center of the box, the little dash line, is much closer to the top than it is to the bottom. So the structure of this box is bearish in nature, and that says that sellers really reside between the between the price level of 89.31 to 90.85 out there. Now, you're long, or you're looking to get long, or whatever your position is. There would be nothing more bullish than a failed bearish pattern. So there's your second interpretation. If price can close above 90.85 on a monthly basis, this would say that it's ready to run higher. To where right now I'd have to go back to the prior swing point from back in August of 2016. See up here, Coda, up at the highs. So we're looking back in 2012. Again, we're on the monthly time frame out here. This was really a bullish structured box out there. And notice how when price broke through the bottom of that box, nothing more bearish then, right, than a failed bullish pattern. Right there on the trading month of February 2012, it was telling you, okay, this looks like this is going to head lower. Now, granted, several months later, taking us into May, price did get back inside that profile. But notice where price stopped. Remember, think of the way these boxes operate. The top of the box is where your sellers are going to reside. The bottom of the box is where your buyers are going to reside. The center is where both buyers and sellers reside. Now, if the center is closer to the bottom of that profile, it's telling us that we've got sellers inside that zone. And that is exactly where price had stopped out there. So right now we can say on a monthly basis, just simply in taking a look at using our market profiles out here, it's really in a sell zone. I don't know any other way to interpret it. If I came up with another way to interpret it, I'd be lying to you. And I'm really not interested in, this is just about, hey, let's look at a chart. Let's take a look at the tools that I use. And let's interpret it. What is the meaning of those tools out there? Now, you also want to take a look at FXF. So let's do the same thing. That's the Swiss franc out here. And again, prices above the daily, prices above the weekly, if there's a close above 95.11. So those are bullish. And prices trading above the top of the monthly. Now, obviously, we're early into the month, but still trading above it. I'd say this week, if you close above 95.11, that's the weekly. This would say that price wants to continue to move higher. Now, move higher to where? You open up the daily chart here a bit. So certainly you've got some resistance out here in this range as well. This range being about the 95.70-ish area or 95.54. If it clears that, then the congestion will have cleared, and price should move up to about 97.79. So that's what I see, Coda, when I take a look at those two instruments for you, and I hope that helps you out. Let's go to another question that has come in. So let's go back to Phil. Phil writes in and says, Steve, I noticed the 10-day rate of change on the VIX was over 80% in the past few days. Looking back, I can only see 3 or 4 other occurrences in the past 5 years. You don't have to talk about the 10-day, and I was wondering if the observation holds of any importance. I used to do that. I used to look at the 10-day all the time, and so how are we going to do this? I'm just going to create a custom chart out here for you. So let's just do this. Let's do this. So here's how I would just simply start if I didn't have something. So we're talking about the VIX first. So let's put the VIX up top here. And so we've got that. Let's now add our rate of change tool to it. And so give me a moment to pull that up and add that to what we're looking at. So that way we can take a look at exactly what Alex is looking at. And now we've got that set at a 10-day level, 10-day rate of change out here. And then what we want to do is, so let me see here. So you only see 3 or 4 other occurrences in the past 5 years. So let's just do this. Let me just pull this back quite a ways, because I think there's plenty of other occurrences out here, and I'm just back into 2007. But what I want to do is I'm going to put a yellow horizontal line on my screen out here. Looks like that's about right in that range out here. But let me just get it exact out there. So the reading was 71.33, 81.74. So 81.74 is the nut out there. So let me just take a look at that, 81.74. There we go. And so we can see that now. Oh, here's what we also want to do, right? We want to go ahead and add the S&P 500 to this. So we're looking at the index. Let's go ahead and insert a symbol. That symbol is going to be the S&P 500, and then in doing so, let's take a look at this as a candle chart, and let's go ahead and insert that. And how are we going to do this? Let's just move that to the top. All right, so let's move the S&P 500 to the top. Let's actually turn off the spot VIX index. Okay, let's get some more screen out here. We don't really need to take a look at the spot VIX index, do we? So let's just turn it off, because what we're really looking at is Phil's observation. And he's asking to know, is there anything important here with having that 10-day rate of change? So let's go back to the last one. The last one that was up at these levels out here, Phil, came in October 11th, 2018. And so they're just going to expand the chart a bit so we can see there was just a couple of day bounce that occurred out there when that happened. Of course, there was a gigantic rate of change at the bottoms here in February of 2018. But that didn't that rate of change didn't stall until it got up to about 237% for a 10-day period of time back in February. Let's see if we can find anything else that's kind of close to this area here. So here's another one. This are back at the lows back in August of 2015 is where you had that type of rate of change pull back. Do we get close to that exact number out here? Here's another occurrence back here in August of 2011. You can see the bottom that was associated with the market back then. Here's one in 2010, May of 2010. That just had about a 3 or 4 day bounce out there. Here's another one back in 2008. That led to about a 3 or 4 day bounce out there. So there you go. As Gus in my big fat Greek wedding would say, I think there's other VIX elements, Phil, that are more important for you and I to take a look at. We'll do that when we come back from this break. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go back to the spot volatility next. Let's finish off Phil's question out here. And so, Phil, what's really important for all of us to pay attention to, number one, when the spot volatility index gets out of whack, as it is right now, it's printing at 2056, trading above all of its futures contracts, even going out to April of next year. This is a misalignment that will get back into alignment. Now, what it also does is it provides us with a way to compare the spot volatility index versus its 3-month, its 6-month, or its 1-year counterpart out there. And here, what we can see, so similar to your rate of change concept out here, but what's different here is we're really paying attention to the forward futures contracts. And when that ratio gets above 1 out there is when we start to see bottoms form, or bottoms potentially forming inside the S&P 500. Now, ideally, when those bottoms in essence get confirmed is when that ratio dips back below the 1 level. That's not where we're at right now. It's something to be paying attention to, maybe even by the end of the day. So the 3-month version is trading at 2011. The 6-month is trading at 1964, and the 1-year at 1925 out there. So, but I would be paying attention to the level of 20.08. If the spot volatility index closes below that today, that would be a pretty important message, at least in my opinion, for each of us. There's many other spot VIX tools that we use from time to time, but I think that's the one that is most important as we speak right now. So we've also got where'd that go to? Let me pull that back up. There was a message here from one of our listeners, goes by the name of Baseball Eyeballs. Baseball eyeballs. I can say it. I just can't say it quickly out there. This is one of my favorite times of the year. Of course, pretty much every day is my favorite time of the year, but this is one of my favorite times of the year because you got the Little League World Series. And I switch and I watch those games versus the MLB games out there. There's some amazing plays that go on, and it's just I just think it's the best watching these young men and women. There are a few women that are playing out there, and I just think it's a great time of the year. But there's 2 questions that have come in. The first one is with regard to the seasonal time frame. Yes, we're in the unfavorable seasonal time frame. It really begins in earnest the end of July, and it ends typically around the middle of October. Now, we have to take a look at chart patterns there. So we're certainly in that seasonal or unfavorable seasonal time cycle out there. It doesn't tell us how far the market, doesn't tell us where the market will be in October. Doesn't say how low or anything out there, just at a bottom will typically form there. So what we want to do is not get too caught up into the seasonal picture other than being aware of the so-called tide going out, so to speak, but instead we trade chart patterns. I trade chart patterns out here. That's how we get the message of the markets and not get too caught up into the so-called cycle, so to speak. You know what I mean? But you ask another question, which is really more important to you, which is you want to be able to take a long trade and ticker symbol SWKS before they report on earnings, which is after the bell today. And so what you're asking me to do is I would think is to look at these charts. And really, I would have to say, can I find a bottom? Because if I can't find a bottom out here, man, that's pretty. Then how? I don't have any other inside information. It would be like it's like going to take a look at the Dow and recognizing the TD setup 9-count pattern, or the top 100 international companies in the New York Stock Exchange and recognizing that pattern, or the Dow Equity Futures contract, or the breakout level and wave number 7 inside the 2-hour time frame chart for the ES Mini. So with regard to Skyworks Solutions out here, I'm going to ignore these charts here with our TAS market profiles, because they don't tell me whether there's been a bottom or a top that is formed out here. If I take a look at the daily time frame chart, I don't have a bottom signal for you. I don't have anything. Doesn't mean that price won't respond positively like you're anticipating and move higher up to 82.34. That would be the first place that I would be looking at. But I've got a bottoming pattern back here in June, but I don't have one over the past several days out here. I don't know Skyworks Solution, how well it works with the markets, directionally speaking, but on its own, on a daily time frame, I don't have anything. On a weekly time frame, let's just see if there's anything out here. Is price pulling back to support? And the answer is no, I don't have that. Now, in the case of Skyworks, price should find some real resistance at 90.41. So let's just say there's a real positive move. Now, that'd be quite a move, 79 to 90, but anything is possible out there. That's your real resistance level. So that's going to assist you with regard to your risk reward out here. So you're taking the trade. It would be like asking me the question, should I take the trade as a long, regardless of whether earnings are coming out or not? I don't have the bottoming signal to suggest that you would go ahead and fire away. When I take a look at the monthly chart out here, there's nothing enthusiastic about it. Granted, supported about 64.50, but nothing that I can see. So thanks for writing in. Best of luck if you take that trade. You may be right. I just can't find the signal that I think you were looking for to say fire away, so to speak. Batter up. Okay, let's take a look at other requests that have come in. Thomas K. Thomas writes in, I love your show. Congratulations on your great calls. Please review the rules of the TD9 count. I thought that it was the number of closes above or below the 4 bars before. Is that correct? Yeah, in essence, that is. Now, I don't know if you're saying it the same way that I'm saying it, so let me just restate it. The way that the 9 count pattern forms, either to the upside, let's take a look at to the downside. The downside, you're looking at each day, each bar. We're using a daily chart, but it's really each bar, and you're comparing the close of that bar to the close of the bar 4 bars earlier. In this case here on a down count, if that closes below the bar 4 bars earlier, then you get number 1. You move to the second day out here. So the second day inside the NYSE on an international, for its international equity positions, looked like that was July 26th. That was a close below the bar 4 bars earlier, and you continue that cycle. So it is, when you get to bar number 9, now Tom DeMark is the one that developed this tool out there. When you get to count number, and it's a part of his sequential count, and it's a part of his combo count series out here. So this is just one element of that system. And when you get to bar number 8, that's when the hair on the back of your neck starts to stand up. I mean, in a positive way, you start looking, you start paying attention, because it's either on bars 8, 9, or the bar following 9, where if there's going to be a bottom, in this case here that forms, it would be on those bars. So I use this, if today's low inside the New York Stock Exchange International move below bar number 9, then the pattern would be invalid, at least the way that I use this, because it's just simply, it's a numbers game. We just pay attention to numbers. That's not what took place out there. So on the international side of the New York Stock Exchange, actually a higher low has kind of a meaning too out here. So yeah, that's the TD setup 9 count. There's a workshop that goes through all the particulars. It's on that subscribers have access to. It's in the archive section of the newsletter area out there. Tom writes in. Tom G says, Steve, good afternoon, and wow, what a week so far. Yes, no doubt about that. Entering long trades in dust today, and looking to get your thoughts on this. Doesn't gold have to slow down soon? Okay, so let's answer that question. Doesn't gold have to slow down soon? You're going to have to wait till we come back from the break. But our charts are going to answer that for us. And we'll answer Tom's question about dust when we get right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go back. And, earlier when Coda in our den was asking about the yen and the Swiss franc, and part of his question was, are there any implications that we can glean from that, which really kind of feeds into the chart that we're going to be looking at, sort of, so to speak. It's a little bit of a segue. And that's back to Tom's question, which is, doesn't gold have to slow down soon? It's really important to take a look at an instrument, especially a commodity like gold, bonds, the U.S. stock markets, the equity markets around the world, and understand how they're trading in all the major currencies out there. Because something that is rising in all currencies says you have traders around the globe that are having a good old time out there as prices continue to rise. In other words, there's no sellers of gold at this stage here for the most part. I'm not talking about the intraday out here. There's no sellers of gold in dollars. There's no sellers of gold in euros. There's none in yen. There's none in pound sterling. What's going on? I think what's going on is big money out there in those other currencies, euros, yen, pounds. They're trying to position themselves because they're very concerned about their currency out there. And they would rather hold gold and U.S. dollars. That's why we see Treasury bonds doing really, in essence, the same thing. We take a look at how our Treasury bonds being priced in all the major currencies out there. But Tom is a shorter-term trader out there. So to answer Tom's question, we need to be aware of this, and Tom needs to be aware of this. But really, he's kind of looking at a short-term time frame. Now, what we know about gold itself on a daily basis is it still continues to stretch higher. with less relative energy out there. Hence, you can see the bar that automatically gets drawn out here. Now, that's not a problem unless you see some type of bearish reversal candle out there. But I know, and today's going to be day number 7, potentially a TD setup, 9-count pattern out there. But Tom's more interested in looking at short term. So those of you that are longtime listeners, you know that there's a directional correlation between gold and the mining sector, the mining equities out there. So all we really need to do, you and I, is for Tom, is really go take a look at a short-term time frame chart for gold to help answer his question. And so to do that, what you and I are going to do is we're going to take a look at a 30-minute time frame chart here for gold. And probably what Tom sees out here was that on a 30-minute basis, the high that actually came in, the high was at 10:30 this morning, during the 10:30 session, 10 to 10:30. That was the bar following bar number 9 of a TD setup 9-count. So Tom is saying to himself, hey, I know that's a potential for a short-term top. Then what happens? Well, then we get Stevie's Rhodes momentum indicator signal that confirms at 1 o'clock this afternoon. That occurred when we got this bearish engulfing candle. And then shortly thereafter, as we came into 1:30, price was trading below Stevie's green line. It still is. But what this says to you, Tom, is that gold may pull back, but it just may pull back to support. So if you're going to get into dust or you're already in dust, you've really got to watch these support levels, I would say, inside of gold. Where is the next support level for gold? We're trading at 15.15. It would be 15.09. That's the center of the box out there. Remember, fair value, buyers and sellers are hanging out there. This is an equally distributed profile, meaning it's really pretty much in the center of the profile. So neither side gets the advantage, bulls or bears. The next level of support would be 15.0280, and your dust trade wouldn't really begin to pay off, so to speak. When I mean pay off, where you would see some type of short-term change in trend signal for gold would have to be a close below the last area where it broke out. And that last area where it broke out was 1497.70. So those are really your parameters. For me to go take a look at dust doesn't really do us a whole lot of justice out here, just because of that directional correlation. So I'll summarize it like this. I don't see the sellers from a daily perspective anywhere. Gold's rising everywhere out there. And until that party stops, yeah, you might have somebody that's a seller in some foreign currency out there, but you've got buyers just sitting there waiting to continue to suck up those orders. And so that's my take on the chart patterns for gold and dust and everything else. So, Tom, thanks for writing in. I hope that helps you out. Alex writes in. Let's go take a look at Alex. Alex writes in and says, hey, Steve, long-term holder of IWF. So let's go take a look at IWF. Let's get that rolling on the charts out here. Let's make sure we get back to the 3 time frames. And let's answer his question, which is what? Would you add to it at the June 3rd level? $9 lower than it is today. Okay, so would I add to it at the June 3rd level? IWF is the iShares Russell 1000 Growth ETF out here. Here's what we know. It's trading below the daily profile. It's trading right into a brand new weekly profile formed this week. The bottom of that box out there is 155.68. So you're above it. That's good. You're trading in between the weekly. I'm sorry, you're trading in between the monthly set of profiles. But the only way that I could answer that question, I could answer it a number of different ways. The way that I will answer that question would be if there's a pattern that's present down there. So today is going to be bar number 7. So what you'd be looking for is a push lower tomorrow on Thursday or a push lower on Friday, meaning a lower low, below the low of a few days ago. Or it could be on Monday out there. And maybe that happens, but what I really want to see, as opposed to just use June 3rd as a target, is I'd like to see some type of bottoming pattern. It's no different than taking a look at this Dow chart out here, knowing that today is going to be bar number 8. Now, we don't know if tomorrow will be bar number 9 or not, but we know what the closing price is. But we also know that Dow Equity Futures contracts already confirmed its pattern. And quite frankly, I prefer to lean on the Equity Futures contract because those are the ones that have all the price discovery going on. The cash indice that trades for 6.5 hours compared to give me all the data out there, I always like to go with all the data. And so with regard to answering your question, we've got to see as it trades down into that level, is there some kind of pattern that is in play out there? There's no wave count that we have at this stage. If we take a look at those wave counts, now it did create the IWF, a Rhodes Momentum Indicator top. So it did that with price movement higher, less relative energy. Had the bearish engulfing candle. You get the close below Stevie's green line, and then, of course, below the profiles, and then a break of support out there. And support was 158.68 is what it looks like. It's got all of those makings. But where was I going with my thinking out here? This TD setup 9 count. Well, we just got to pay attention to patterns out there. So that's my answer. I can't do any forecasting out in advance to say you should really go ahead and fire away right then and there. So Alex, I hope that helps you out. But ping me back. Write me back, email me back if, in fact, that's the way that it plays out for the IWF. So that takes care of all of the questions out there, and I do appreciate the questions. It always makes the show so much easier, and then it really, I think it helps you out. At least you've got another set of eyeballs looking at something. So what are we going to go take a look at next? So you've got the NDX 100. That is now mean and green out here. That's up 18 points. The semis are up 7. The NASDAQ Composite, 17. The S&P almost back to flat on the day. Reminds me of the bottom back on December 26th when we had that pullback the next day. And then the market took off. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So I had mentioned before we went to that break that the NDX semis and the NASDAQ composite were trading higher. So let's go take a look at the NQ out here so I can provide you with the parameters. So we looked at the ES Mini and the retracement, the pullback, where it found support. We did that because on the 2-hour time frame, it was a 2-hour time frame because it had a valid bottoming pattern out there. We like to have valid bottoming patterns and then take a look at where support and resistance is. Inside the NQ, it didn't really have a valid bottoming pattern on the 2-hour time frame. We're still going to look at it. When I say that, its wave count to the downside just got to wave number 6 or letter F out there. But that being said, we still have the parameters. It still did the same thing that the ES Mini did on its 2-hour time frame, was that price pulled back to its breakout area, which was 73.93.75. I mean, it was a perfect test of support. Now, we also know that resistance inside of the NQ is at 77.0550. But let's switch back to a different time frame chart. Let's go take a look at our horizontal trading range levels for the NQ, because what we can see here is we know that the weekly level, that's the green line. So you're seeing green, blue, and red out here because each of them we're using opens or closing bodies of the candles out there. And so a daily close is going to be typically different than a weekly, except for Friday. Different monthly is going to be different than the weekly. And you kind of get the picture out here. But here's what we do know. When price was moving lower, where price found support inside the NQ was the weekly horizontal trading range, 72.20. You can see that price has now bounced up to yesterday as well as today, the next weekly horizontal trading range level, 75.51. So this will help everybody out to clarify what the NQ is doing. If the NQ, we start to see it trade above 75.51, then what it's telling you is that based on holding support, what you should see is the NQ go try to tag 77.0550. I'm not saying this afternoon, but certainly overnight during the morning. So that's what I would be watching if I were you. Folks, thanks so much for joining me. Stay tuned. Another couple great hours, all set up for you, courtesy of David White, your favorite polar bear, Tom O'Brien, 3 to 5, and Stevie, Perseverance Rhodes. I'll be back with you tomorrow at 1 p.m. Have a wonderful Wednesday.